And welcome back to halftime. Let's hit our chart of the day. It's oil rebounding over the past week on rising tensions in Iran and Venezuela, up more than 10% today, up over 1%. Joe, you have a lot of oil exposure. What do you make of this upside move? Oil right now sitting at its highest level since October, and also the XLE ETF hitting a 52-week high.
And the sector is the best performing sector so far year to date. It's built upon the premise that there is a lot of short positioning in the futures market, along with, in 2025, it was a sector that was ignored and replaced by utilities. So the combination of those two factors are very powerful and could lead to what I believe would be a significant short squeeze. From a technical perspective, spot oil is approaching the 200-day moving average at 62.45. It has not spent much time above that over the last 6 months. That's powerful. So you're getting your exposure here in energy equities. I'm doing it through Valero. And then, of course, I mentioned yesterday on the show that I bought the OIH to get exposure to the various oil services names. I think that's the right play. The ETF, it maintains Baker Hughes. That has been an outperformer in the energy sector. But clearly right now, this is about reversing that bearish positioning in the oil futures market, building strong bullish positioning in the energy equity market. And I think it sustains itself because the concerns related to Iran are not going away, it looks like, anytime soon.
You know, to that point, and Shane, I want to come to you about this. JP Morgan out with a note on oil, saying in part the limited rise in oil prices, even though we're seeing a 10% rise over the last week, they say it seems short-sighted given that regime changes in oil-producing countries, whether through leadership transitions, coups, revolutions, or major political shifts, can have a profound impact on the oil production and also the prices. Agree with that thesis that this upside move, 10% over the last week, it may be actually underdone?
There's certainly a possibility for that. I think when we think about now we have multiple locales where we could see oil disruption. And the reality is that you can say that there is this much oil in the ground in Venezuela and that could come onto the market and essentially add to the supply over the next couple of years. And there's just a lot of things that need to happen prior to that occurring. There's also a lack of quality in that supply that I think is probably being underappreciated by the marketplace. And so, but I think the most important thing is what Joe sort of mentioned in terms of the positioning here. Many investors are likely underexposed to energy at large. And so looking at that as an opportunity, not necessarily from a short-term valuation perspective, but looking at it more long-term, both on the oil and natural gas side, which has seen a pullback, that to us makes sense in this environment.